The dollar is not being replaced by an announcement, it is being replaced by plumbing. That sounds boring until you understand that the country that controls the plumbing controls the house. For 80 years, America controlled the financial pipes of the world, the oil pipe, the banking pipe, the treasury pipe, the sanctions pipe, the SWIFT pipe, the invisible network that decided who could move money, who could borrow cheaply, who could trade freely, and who could be punished without a soldier crossing a border. That was the real empire, not just aircraft carriers, not just military bases, not just speeches about freedom. The real empire was a system where the world needed dollars to function. And now China is building exits. That is the story behind the number everyone should be watching. Nearly 30% of China's foreign trade is now settled in yuan, not dollars, yuan. This is not just a statistic. It is the beginning of a different operating system for global trade. 15 years ago, yuan settlement was almost irrelevant. The dollar system was so dominant that challenging it sounded like fantasy. If a country wanted to buy oil, settle commodities, borrow internationally, or keep reserves, it needed dollars. The dollar was not just a currency, it was the permission slip for global commerce. But the world changed. If your economy depends completely on dollar rails, your sovereignty is conditional. That sentence is the key. Conditional sovereignty is not real sovereignty. If another country can freeze your reserves, block your banks, and decide whether your companies can settle payments, then your flag may be independent. But your financial bloodstream is not. China saw this long before most Americans did. It did not just complain, it built CIPES, it developed the digital yuan, it signed currency swaps, it pushed bilateral trade settlement, it expanded yuan lending, it encouraged oil sellers, commodity exporters, and developing countries to treat the yuan not as a symbol, but as a usable instrument. That is what makes this moment different from every previous de-dollarization fantasy. There is now infrastructure for years. Critics of the dollar could only say what they disliked. They could say America abused sanctions. They could say the Federal Reserve exported instability. They could say Washington used the dollar to force political outcomes. But criticism is not a payment system. Anger is not liquidity. Resentment is not settlement. China's strategy is different. It is giving countries a working path. Optionality is the beginning of empire decline. When the old empire is unavoidable, countries complain but comply. When the old empire becomes optional, countries negotiate. When enough countries negotiate. The old empire has to offer terms instead of issuing orders. That is the phase we are entering. The dollar is still dominant, but dominance is not the same as inevitability. And the moment the dollar stops feeling inevitable, everything changes. Start with oil. The petrodollar system was the foundation of modern American financial power. Saudi Arabia priced oil in dollars. America provided security. The world needed energy, so the world needed dollars. Dollars came back into treasuries. Treasuries funded American deficits. American deficits funded the military presence that protected the oil system. It was a loop, a brilliant loop, a loop that allowed America to enjoy the benefits of empire while pretending the system was natural. But no, empire's advantages are natural. They are maintained. And the petrodollar loop is now under pressure. China imports enormous volumes of oil. It has customer power. Currency swap lines make yuan settlement easier. Non-dollar oil transactions are no longer theory. A meaningful share of global oil trade is already being conducted outside the dollar. That does not mean Saudi Arabia has abandoned America. It means Saudi Arabia has learned to hedge. And hedging is what countries do when they no longer trust the old guarantee completely. This is the pattern everywhere. Nobody wants to be trapped. That is the new mood in global finance, not pure anti-Americanism, anti-dependence. Countries are not all becoming Chinese allies. Many distrust Beijing. Many fear Chinese power. Many do not want yuan dominance any more than they wanted dollar dominance, but they want a second door. That is enough, because a second door changes the behavior of everyone in the room. America still thinks the main question is whether the yuan can fully replace the dollar. That is why Washington often underestimates the threat. It looks at the yuan small reserve share and says, still small. It looks at China's capital controls and says, not trusted enough. It looks at US markets and says, no rival has this depth. All of that is true, and all of it can be true while the dollar-esque monopoly still weakens. A monopoly does not need to be replaced by another monopoly to lose power. It only needs to lose its ability to trap users. That is what is happening. The yuan does not need to become the only reserve currency. It needs to become a serious settlement currency for key trade routes. CIPES does not need to dominate global banking. It needs to let sanction wary countries keep moving money. The digital yuan does not need to replace cash everywhere. It needs to allow selected cross-border trades to clear outside American visibility. BRICS does not need to become one unified empire. It needs to give commodity producers and large importers enough confidence to settle without automatically touching dollars. That is the quiet revolution. The old system was centralized around American financial trust. The new system is fragmenting into corridors. Each corridor by itself looks manageable. Together, they form a map of escape routes. That is why the 30% number matters. It tells you Yuan settlement is no longer experimental, it is operational. The second number that matters is treasury demand. But if countries trade more in Yuan, local currencies, or digital systems, they need fewer dollars. If they need fewer dollars, they hold fewer dollar reserves. If they hold fewer reserves, they buy fewer treasuries. If they buy fewer treasuries, America pays more to borrow. That is how the change reaches ordinary people. It does not arrive with a headline saying, "Dollar empire ends today." It arrives as higher yields. It arrives as mortgage pain. It arrives as credit card rates that refuse to fall. It arrives as inflation that never fully disappears. It arrives as Washington spending more on interest and less on everything else. It arrives as a country that once financed empire cheaply discovering that the world is asking for a higher price. This is why the dollar story is a household story. Every American family lives inside the reserve currency system, whether they know it or not. Cheap imports, cheap borrowing, deep capital markets, military reach, and deficit spending are all tied to the same invisible privilege, if that privilege shrinks. Life gets more expensive, not in one dramatic collapse. In a grinding adjustment, that is the connection most political television will not make. It is easier to argue about parties than to explain reserve currency mechanics. The collapse has not happened, but the conditions that made collapse unthinkable are weakening. China's digital yuan is one of the clearest signs. A digital currency controlled by Beijing is not simply about convenience. It is about bypassing the old correspondent banking system. It is about settlement without SWIFT. It is about trade flows that American regulators cannot easily pressure. Sanctions depend on visibility and access. If money moves through a system you control, you can block it. If money moves around you, you can threaten, but you cannot automatically stop it. That is the heart of the matter. America's financial power has always depended on being in the middle. China is building a world where America is sometimes on the outside. Not always, not everywhere, but enough to matter. The biggest mistake American leaders can make is to laugh this off because the yuan still has weaknesses. Of course it has weaknesses, but China does not need to win the trust of everyone. It needs to win the usage of enough trade partners. Usage creates habit. Habit creates liquidity. Liquidity creates confidence. Confidence creates reserves. Reserves create power. That is the sequence. The next reserve order may not be one currency ruling everything. It may be a split system where the dollar remains powerful, but the yuan becomes unavoidable in key regions. That is still a major loss for America because the dollar's greatest advantage was not being first. It was being necessary. If the dollar is merely first, America has influence. If the dollar is necessary, America has command. China is trying to move the dollar from command to influence. That is the quiet war. No missiles, no tanks, no dramatic declaration, just contracts, clearing systems, swap lines, commodity invoices, digital wallets, central bank reserves, loan agreements, and over time, a new reality. They confuse past dominance with permanent entitlement. They think because countries used the system yesterday, they will use it tomorrow. They mistake dependency for loyalty. That is the error. Most countries were never loyal to the dollar. They were dependent on it. Now they are trying to become less dependent. That is why this moment matters more than the headline suggests. The headline says the yuan is used in more trade. The real story is that the world is building the ability to say no to automatic dollar settlement, no to automatic treasury recycling, no to automatic exposure to American sanctions, no to the idea that one country's banking system should decide who gets to participate in global commerce. That does not mean the yuan becomes king tomorrow. It means the king has rivals at the gates, and some of the gates are already open. So when you hear 30%, do not hear a statistic, hear a warning. The dollar is still standing, but the world is no longer standing still around it.